Okay, so those are some of the top headlines of the trading day. Let's just give you a glimpse of how the markets have ended for the day of trade on Thursday. The Sensex expiry at play, putting a little pressure on the market. We've ended absolutely flat for the Nifty, just shy of that 24,400 mark. So 24,395 to be precise is where we've ended. Sensex, however, saw a little bit of a recovery in the last few minutes of trade under the cash session, 113 points higher for that index. India VIX cooled off another 2.25% today, so that was something worth watching out for. The broader end of the market saw recovery from the day's low, but nonetheless it ended absolutely range bound with just a speck of green coming in on both the Nifty mid-cap and the small-cap indexes. Taking a look at what the sectoral tilt is looking like, you had some massive pressure on metal on the back of the correction that we've seen in Hindalco as well as Nalco, two stocks that rose on Wednesday on soaring aluminum prices. Sharp correction on both of those names, leading to the metal index being the top sectoral loser, followed by cuts on Nifty Bank, Finance, Oil and Gas, PSU Banks, Pharma, with energy being absolutely flat. On the flip side, it was names like Mishra Dhatu, Solar Energies on the back of Solar Industries, on the back of earnings, keeping the Nifty Defense Index afloat, the top sectoral gainer with gains of 1.5%, followed by Realty, FMCG, IT, Media, with auto being slightly flat in trade. That was the tilt of the trade when it comes to sectors. On the overall Nifty 500, the broader end of the market was quite even. Stephen, you had about 250 stocks in the red and the green respectively. Big cuts on Physicswala and Nalco, but on the flip side, Astral, Netweb, Godavari, Sarda Energy, all of them have done well. While I was on the equity front, let's also take a look at the FNO snapshot, Sajid.
Right. If you look at what happened today on the Sensex expiry day, there was some kind of volatility which came into private sector banks, where we saw some selling, high selling pressure coming in the last 15 minutes of cash there. But the Nifty ending below 24,400 mark, marginally in the negative, while the Sensex was up marginally positive in today's trade. There's open interest build up happening, some shorts getting built in the Nifty, and the Nifty adding nearly 1.83% in open interest. Nifty Bank again, the index was down 0.4% in today's trade, and mainly led by private sector banks. And there too we saw some shorts getting built up, especially in the private sector banks. The index open interest up nearly 1.7% there. So HDFC, ICCI seeing a long unwind, Axis is seeing a short build up, Kotak and PNB were seeing some short build up, so is SBI, which saw some kind of long unwind coming in. So long unwind coming in for some of the PSU bank as well as short for some of the private sector banks there. In the call and put writing, the call writing was aggressively seen in 24,800, so there's a strong resistance which is getting built gradually, but put build up is happening at 24,300 and 24,400. And if you look at the distribution, we have finally closing the day with open interest higher for the call writers at 24,400. So that's turning out to be some resistance for tomorrow's trade, at least in the morning trade, which we are going to see there. But as I said, we saw action with across the board with respect to the earnings coming in. Astral saw a good amount of action. The futures, up nearly 9%. Solar Industries saw a jump of nearly 8.5%. The earnings coming in the last 1 hour of trade, and Concur was up 4.5% in today's trade. In the losing pack, you had stocks like Nalco, where the index Nifty Metal was down in today's trade. The Force Motor and Page Industries also saw a fall of nearly 3.5 to 4%, with short build-up happening in those counters. But in the open interest gainers, you have Page Industries, where 16% jump in open interest was seen. Geo Finance, after that Bank of America trade, which came in for Geo Credit, saw some closing the stock closed lower and open interest up nearly 13%. And Solar Industry saw nearly 9% jump in open interest, mainly long build up, which we are seeing there. LIC saw some long unwind happening, so the open interest was down nearly 4%. Dixon saw short covering, and Manappuram saw long unwinding in trade at close. So we are ending the market Nifty 50 below 24,400, going into Independence Day week, and while global uncertainty continues, and so we're going to see how the market is going to end on Friday, with some kind of hopefully there will be some recovery for the private sector banks tomorrow.
Okay, and here's watching out for that recovery in the private sector banks. You'll be keeping a close eye over there. But in terms of everything else to watch out for on Friday for the trading session, let's bring on board Meryl, who's here with a list of everything to keep a close eye on. Meryl.
Right, so these are some of the major events to keep on your radar coming up to the 14th of August. In India, we'll be tracking the data coming in on wholesale prices, while retail sales and business inventories is in focus from the US. Eurozone will be also tracking GDP data as well as unemployment. And in terms of earnings candidates, while we've run out of Nifty earnings, the other broader market names that are going to be in focus on account of their first quarter numbers, these include Chola Financial, 3M India, Alchem Labs, Lux Industry, Bharat Dynamics, and many other names as well. In terms of corporate actions, watch out for Knowledge Marine. The board is going to be considering a stock split. And in terms of lock-in endings, we've got Fractal Analytics in focus, where a 51% of its share capital is going to be coming out of a lock-in period. So do watch out for some selling pressure on that counter as well. In terms of the primary market names, it's a packed calendar. We've got Behari Lal Engineering and Shiprocket. Both these IPOs are going to be closing on the exchanges, while Technocraft Ventures and Leap India IPOs are going to be listing. So do watch out for all of these counters in focus on the 14th of August.
Thanks, Meryl, for the stocks to watch. We now have Lakshmikant Shukla, technical analyst, institutional research at Yes Securities, joining us. Lakshmi, hi. How do you look at Nifty Bank today? We saw some kind of selling pressure coming in towards the last half an hour of trade for private sector banks like Kotak. You had HDFC and ICICI all seeing some negative pressure coming in.
Hi, good afternoon to both of you. Thank you for me having in your show. So yes, you rightly said that we have seen some sort of pressure, but if we look at the overall structure of Bank Nifty, I think it is relatively stronger than Nifty, supported by the development of an inverted head and shoulder formation. Now, index is approaching toward a key inflection point toward the levels of 58,250 to 58,500 zone, which could act as the resistance for this Bank Nifty. A sustained breakout above this zone would confirm this upward traction and also the formation of that inverted head and shoulder pattern on the daily chart, from where it could gain momentum toward the levels of 59,200 followed by 59,500. And on the downside, we could expect this upside breakout till it hold up the levels of 57,200 to followed by 56,700 zone, where we have seen clustered of support area where buyer have consistently stepped in. So I am expecting upside breakout in Bank Nifty, although Nifty Private Bank is not performing on the daily chart, as it has been making lower tops and lower bottom. So I think probably it could find support near the levels of 27,000, where we could see some buying momentum in Nifty Private Bank. But if you look at the structure of Nifty PSU banks, so it is holding its prior swing low. Now it has started consolidating above its near its previous swing high. So I think a sustained breakout of the levels of 8,900 could provide some strength in PSU bank, and we will see positive momentum toward the levels of 9,150 to 9,200 June.
The levels that you're watching out for on the indexes, Lakshmikant, hi. Give us a sense of how you're looking at the market on an overall basis, because this week entirely so far we've been in a very narrow range. Any hope for a recovery on the index next week?
Yes, we witnessed a very subdued kind of trading sessions as prices action largely contained within the previous day range, reflecting indecision and a lack of directional conviction in Nifty. Despite this, our market continued to display sign of some sort of strength as it attract buying interest near its support zone. Most importantly, for last 2 days, it has been defending 20-day SMA levels while forming hammer candlestick pattern right at the support area, which is showing some really clear rejection around of lower levels. So I think this highlight active participation and indicate that traders are defending the established demand zone. So now we are waiting for the breakout of the levels of 24,600. So any decisive breakthrough of the levels of 24,600 could push it higher toward the levels of 24,800 where this 200 DMA is placed. So that would be the major hurdle for the Nifty. But once it surpasses this level, then after it will regain momentum, and we will see a positive move in Nifty toward the levels of 25,000. Till then, the 20 SMA that is placed around the levels of 24,250 followed by 24,000, whereas 61.8 Fibonacci retracement is placed. That could act as the strong support area. So probably we can hope this bounce back move from the levels of 24,250, and we will going to break through the levels of 24,600.
Okay, those are the levels to watch out for the coming week of trade for the Nifty. Lakshmikant, quickly give us your stock picks as well. What's looking good?
So I would like to recommend two stocks. First one is Glenmark. So in today's sessions, it has seen falling trend line breakout on the upside, and for last few days, it has been defending its short-term and long-term moving averages. So I'm expecting upside move in Glenmark. Probably we could see the targets of around 2,420 with the stop loss of 2,000, 2,270 on the downside. Second stock where I found buying traction is Bhel. So BHEL has seen the formation of Dragonfly Doji in today's sessions, and we have seen excellent breakout in yesterday's sessions as it has seen recovery from the lower level, and now we could see further consolidation breakout in Bhel, and with the formation of bullish candle. RSI is also given positive crossover on the daily chart, so I'm expecting big upside move in Bale toward a target of 490. And while buying this stock, one can keep the stop loss of 409 in case of any dip.
Coming in, thank you so much for your outlook, Lakshmikant. We hope to chat with you once again very soon. Thanks for your time today. Shifting focus then, let's bring you the top headline of the day, and that's Tata Trust has accepted Mr. N. Chandra's decision to not extend his term beyond February next year. The trust praised his decade of leadership while setting up a selection committee to recommend his successor and ensure a smoother transition. Anurag Joshi is joining us with the latest updates on this development.
The trustees of Sir Dorabji Tata Trust, who met today, passed a resolution to initiate the setting up of a selection panel as soon as possible to recommend the successor to N. Chandrasekaran, who announced his decision yesterday not to seek reappointment when his term comes to an end in February 2027. The panel is being set up in accordance with the Articles of Association of Tata Sons. In terms of the succession planning right now, the field is wide open, but it's still early days whether the Tatas seek an internal candidate or they look externally to find the successor. Internally right now, in terms of the talent, there are CEOs of the bigger Tata companies, and that includes TV Narendran, who heads Tata Steel, and Praveer Sinha, who is the CEO of Tata Power, and also Saurabh Agarwal, who is the CFO of Tata Sons. But these names are still up in the air since it's still premature, and the panel will have to finally take the decision on the matter. The only Sir Dorabji Tata Trust met today, whereas the other key trust, the Sir Ratan Tata Trust, could not meet due to restrictions imposed on it by the Charity Commissioner from holding any meetings or taking any key decisions.
Okay, Anurag, thanks so much for bringing us the latest details on this front. But on that note, time to slip into a very short break. On the other side, we're going to be decoding a very interesting report on how the first half of India's markets have performed and what's the outlook going ahead. We're going to have a guest from Axis Capital join us on the other side, so stay tuned and we'll be right back. Back with Market Edge, and as promised, let's dive deep into a very interesting conversation. We've got Mr. Uttam Kumar Shrimal, the Senior Research Analyst at Axis Securities, joining us on the show on a very interesting report that they've come out with. Mr. Shrimal, hi, thank you so much for your time. You know, something that really stands out to me from your note is, and I'm going to read it out for our viewers, your base case target for Nifty by year end is 27,200, bull case is 28,615, and your bear case is 23,030. That's very close to where we are at, in fact, closer than all your other targets. Give us the rationale behind what factors could be driving Nifty towards your 27,200 base case, and if things go well, 28,615 is what you're penciling in. What could be the trigger that leads us there?
Yeah, thanks, Sunny, for having me on the show. Am I audible?
Yes, please go ahead.
Yeah. So this is the first kind of report that we have come out this year. So our base case of Nifty going to 27,200 by December 26 is basically we see that if Strait of Hormuz gets open fully from here on and crude settles down between $70 to $80 and FIs come back because see earnings as we were believing that quarter one earnings will be good, and that has panned out in that way only where we have seen Nifty earnings have grown by 11% in this quarter, and mid and small cap have also grown by more than 20%. They have continued their journey from last quarter also. All these positive things will get our Nifty to 27,200 in by December 26. So this is our base case scenario. If you are speaking for a bull case scenario, then we believe that there should be complete sanctity developed between US and Iran in terms of war. Strait of Hormuz is fully open. Crude settle downs by around $60-70, which it was earlier when there was no war between US and Iran. And FIs back in the game with the earning coming back. All these things will drive Nifty to our bull case scenario of over 28,000.
What is the base case scenario for earnings growth that you're looking in? Because Q1 numbers has been good, but for FY27, what kind of earnings growth are you looking at, and which are the sectors that's going to drive the earnings growth?
See, our base case scenario is that we are building in around 12 to 14% CAGR earning for over next 2 years. And this will be basically driven by financials and auto financials first, secondly auto ancillaries, and thereafter we believe that similarly we will see a good bout of earnings from other sectors like power, energy, capital goods, industrials. All these will drive earnings as we are envisaging 12 to 14% upside by FY27 and FY28.
And within the financials, is there a preference that you have for whether it's a banks or insurance or NBFCs or capital markets play?
Largely, it will be driven by banks, mostly large and private sector banks, and also PSU banks also like us, since we have a coverage on both private and private sector and PSU banks. So we believe that large banks as well as small mid-sized banks, both from PSU space as well as from private space, will be the main contributor to earnings moving ahead.
And also trying to understand a little bit more about the kind of flows that we're seeing in the market, Mr. Shrimal. With FPI selling heavily, what could trigger a meaningful foreign investor reversal? And as of now, the strong DI inflows and the SIP participation that we're seeing, for how long can that continue to absorb the sustained FPI selling pressure that we're seeing?
See, Snehi, if you see, since the last 6 months, FPIs has been continuing selling shares in Indian stock market. But still, DIs have been very helpful. The DIs have been absorbing all these sellings, which is being done by FPIs. Now, we believe that moving ahead, since earning was one of the factor which was not coming back, and if you see this time after many quarters, after many quarters, Nifty has grown in double digit. So we believe that earning is one of the main factor that will bring FIs to Indian market again. Though it may not happen immediately, but over a period of time, they will also assess the situation, and based on that, they will definitely be coming back to Indian market moving ahead. And apart from the earning, if you see, there is a domestic resilience. Economic growth is going on as envisaged by RBI. Inflation is also remain under RBI's control, RBI's scenario that they have envisaged earlier. And we believe that domestic money will continue to coming into the market. So all these things will help FIs will come back based on. So we believe that earnings will be the next trigger, with the biggest trigger. They will assess the situation, and based on that, we believe that they will come back over a period of time.
Look at growth coming in for mid cap because they have been outperforming the benchmarks. Is the earnings growth which is seen for the mid cap the only trigger for them?
No, not mid caps, because see, if you see, FIs are basically they basically invest in Nifty companies, and after many quarters, Nifty earnings have been Nifty earnings have grown in double digit this quarter, and they are very selective in mid cap and small cap space, and where they mid cap small cap have space have already continued their journey of 20% growth from the last quarter to this quarter also. So we believe that the FIs normally remains concentrated on Nifty companies, but they are also selective. So we believe that based on the current quarter's earning and the its earning upgrades moving ahead, so they will all this will drive FIs to Indian market again over a period of time, as I explained earlier. So Nifty has started to perform. Mid and small cap is already continuing their performance from the last quarter also. So all those things will bring them to Indian market over a period of time, but but not immediately.
Mr. Shrimal, lastly, I was just looking at the sectoral bias. You like banking, consumption and IT, but the house is cautiously optimistic or cautiously bullish on realty. Can you give me a small rationale behind your stance on all of these sectors?
See, as far as banking goes, we have seen a great credit growth this quarter, and loan demand has also been very good from the retail side also, and from the corporate side also. So banking, we remain positive. On the IT sector, we are selective, not exactly positive on sector because of various reasons, AI disruption and all that. But we remain selective on IT sector. Consumption also, we are selective. So if you see, this market has become a very, there is a lot of dispersion going on currently in the market. In the same sector, one is, company is doing good, one company is not doing good. So our advice is to remain invested, but remain selective moving ahead. And as far as realty is concerned, we are also selective in realty also. We are not taking each and every stock. We are going by the growth, earning visibility, cash flows, and other important things that we need to look while valuing a company or about while choosing a company. So that's way we are positioning ourselves.
Also, give us a sense of some of the sectors where you are bearish on. Where do you see the growth is going to lag?
See, currently we are not exactly bearish on any sector. As I said, we are very selective. So in every sector we have selective. There are some sectors where we are overweight, and there are some sectors where we are very selective, because in some sectors where they are not doing good, but there are some companies which are doing very good in those sectors also. Like take example FMCG. Nestle is doing very good, but HUL is not doing very good. In the quick commerce space, if you find Zomato is doing very good, but Swiggy is not doing that good. So that way you will find ideas in every sector, in every part of the market, whether it is mid cap, small cap, or large cap. Yeah.
Okay, point taken, Mr. Shrimal. Thank you so much for your time today. It's a wonderful report, and thank you so much for helping us decode that on our show. Thanks so much.
Yeah, thanks a lot. Thanks a lot.
Okay, viewers, with that, we completely timed out on this edition of Market Edge from Sajid, me, and the team that put this show together. Thank you so much for watching. Keep watching ET Now for more news and updates.